what's up? Red Panda Anthem. Red Panda, what's good? Red Panda Anthem.
So let's get into this. Ian, how do you want to start the conversation?
We can do it with the 4 trades to take if the market drops, and then we can adjust. Chime in and share genius.
Okay. All right. Let's talk about the 4 trades that you will take if the market drops or falls apart.
Yeah, so I want to give everybody a strategy that they can use, and then just can tie it in with Forex. But when the market is dropping and everyone is panicking, write these down. I want you to trade the Dow future, the gold future, ZB, which is the bond future, and then crude. So I want you to use 33 contracts on the Dow for 523 points. That will give you a target of $86,295 in one trade. Trade number 2 is gold. If you trade 10 contracts and do 40 points, that'll give you $4,000. 25 contracts with 20 points on ZB or 26 will give you $15,625. And then 20 contracts with 40 points or 40 ticks on crude will give you $10,000. So when your long-term portfolio is getting beat up, I don't want you to panic. I've told you before, I want you to hold for the long term. Long term being 5 years or 30. But it sucks when your portfolio is getting beat up and then we're talking about how well everything is going. You can offset these losses, but what I want to do is put these futures trades with the Forex that she trades, and she'll give you targets as well. So that way you can make money twice off the same asset. So if they're trading the US 30 gold and crude, what targets would you have before?
So I kind of want to go in detail of each one, because when it comes to especially the Dow Jones, like we sell US 30 all the time. So of course we have like certain levels when it comes to Fibonacci. I always use negative 61.8 as our resistance level, as our reversals.
Got you.
Always. So anytime you're trading that, you always want to use that as your reversals. But the way it's dropping right now, like we're expecting a minor pullback, and then I'm expecting it to completely fall, because the reason is like it keeps coming to the level of supports, and then they're not holding. We're not creating new highs. We're not creating new higher highs. What's happening is all these unintended consequences are happening. And when I first talked about US 30 first dropping, it was, of course, because we were tapering off inflation and stuff like that. So when we need to taper off inflation, what they're doing is taking money out of the money supply, out of, like, of course, circulation. And then what happens when that happens is that, of course, interest rates will rise, which causes currency to go up. All right. So with that currency, the US dollar has been rising like crazy. But right now we're at this high monthly level on the US dollar. So when it comes to that, you always want to, like, I don't want to give exact levels, because the reason being is like our volatility, mostly volatility means uncertainty, right? But in the foreign exchange market, when you have this volatility, you're able to make such an immense amount of money.
So much money,
every day, because the foreign exchange market, you have 100 pips to 70 pips that happen every single day. Especially when you're trading like Great British Pound versus US dollar, Euro versus US dollar, and what's happening right now, especially with this war and with gold. Gold is the safe haven. Gold is the safe haven. So of course, when there's fear, people put money in gold, and people also are putting money into oil. I'm expecting, I'm sorry, because you asked exactly about the prices. I am expecting crude oil to go to 110 and 120 long term.
120.
Long term.
Okay. If we say,
And the reason being, and the reason that I say that is because right now with Russia, and what Russia is doing is, when you have a limited supply in anything, if we don't have access to something, of course, that's going to cause supply, like our prices are going to go up in value. And then Joe Biden has even been telling people to like watch out for gas prices to go up, right? And gas it comes from oil, right? So all of these factors are kind of like aligned with one another. But I definitely am expecting oil long term to go to like 110, 120.
Yeah, that's interesting.
Crude oil. And then they have Brent oil out here.
Right. So like, and that's interesting, because that was pretty much the common theme was like, look out for oil. And so we could invest in individual stocks that have crude, but this is one of the things we love, and that's ETFs. And so one of those ones I've been watching myself was XLE. We love the Spider Fund. And so if you look at that, and we always tell people the sources that we use, so ETFDB is one of those sites where we actually can see how the ETF is performing and the holdings inside of it. But the top 2 holdings, Exxon and Chevron, almost 43% of the assets inside of the holdings inside of the ETF. And so that's interesting that you said if oil is going to 120, these are the type of things we should be paying attention to, right? If we want to be not invest individually into oil, but into an ETF, have a safe haven like I know Rashad loves to do. These are the type of things that type of information applied with this information makes sense to be looking as a short-term investment, but also as a long-term one as well.
Yeah, absolutely. Because all markets are synonymous.
Absolutely.
And you can always make money from the market, depending on what's actually happening in the market. It's actually interesting that you mentioned Exxon. Like, of course, I'm not in the whole stocks and positions, but even corporate earnings, like that's something that we pay attention to when it comes to the foreign exchange market. So looking at what corporate earnings are going to be increasing, especially in this first quarter.
I mean, there's always opportunity in disaster. I don't want us to profiteer off of the lost lives of what's happening inside the war. But if you would have shorted the ruble, man, how much money could you said that dropped 45%?
45, the entire market.
So let's talk about that. Let's talk about, because being out here, and I've been in a lot of Ubers, and all the Ubers I'm noticing they all listen to talk radio. It's a common theme, and it's all political talk radio. Yeah. So I'm just getting information from being in Ubers, and then just seeing what's online and reading and stuff like that. So it's obviously a worldwide issue, but it's hit home here because they're close to the situation.
Yeah.
Like Russia borders part of it, like the NATO, as far as Ukraine and Poland and all of these different countries are like right there, and that all affects the EU and that all affects the European continent. So I say that to say it's important to educate ourselves and know what's going on as far as this crisis that's about to happen or currently is happening. But I had asked you during the networking event, how does this affect the foreign exchange market, the commodities market? Like, what is there to look for? Like, what's happening in the financial world?
Yeah, so in the commodities market, like we trade in the foreign exchange market, we trade commodities. Of course, it's XAU USD is the ticker for that, and then US 30, and then we have all commodities. So in regard to oil as well as natural gas, right? Anytime there's fear in the market, you want to buy commodities, period, point blank. But in the foreign exchange market, particularly the safe havens, the two currency safe havens is the Chef franc and the Japanese yen, okay? Now, it was clear as day, as soon as the war broke out, we made so much money just by selling Euro JPY. Two reasons why. The Japanese yen is a safe haven currency. So that means the Japanese yen is going to go up, but also we're on European territory, which means the euro is going to drop. So you make money on the trade Euro JPY. Now we actually study each individual economy and then pair them with each other. And that's why price, of course, makes its volatility, because of course, different things are happening in different countries at each particular time. But the way that you guys look at, of course, like Apple and stocks of all those things where you're looking at corporate earnings and debt ratios, we're looking at, okay, what's happening in this economy at this particular time? We look at it from a supply and demand perspective, and then we look at it from a monetary and of course, economic indicator perspective.
Okay. Yeah, and then you see the volume the same. So for futures, the ticker is 6S for the Swiss franc, and the Japanese yen is 6J. So if you trade them both together, you can have two accounts going. Like imagine if you had two options account, but one of them paid more. One was a premium, one was like normal, but you're making money on both drops. So if you short US 30 or the Dow and the Swiss franc and the Japanese yen, it makes, I hate to say it, but when the market drops like this, I love it, because now we're not ranging. We have more volatility. Long term, it helps to stay with and some of you are like, hey, well, how do you stay in long term when your account's bleeding? I'm like, you have to trade. You have to be able to trade through it and maneuver through it.
And I'm happy you said that, because people are scared of volatility, but in all actuality, like when you just said, if you educate yourself and you learn how to extract money from the market when you're actually trading, there's so much money to be made. Back to back to back to back to back. You know what I'm saying? All of these sell positions that's happening, those are like, that's money, that's volume going in an actual direction. Now, of course, you want to understand multiple timeframes. Like, you don't want to get so lost on minor structure and the smaller timeframes where you're omitting the bigger picture when it comes, of course, I'm talking about technicals now, but when it comes to like the daily, the weekly, and the monthly, those charts are very, very important for us and for us, because we need to understand what's the overall movement of what's happening. right? But our minor structure is what's telling us, okay, this is the right now money. And that minor structure is what you're talking about in
Yeah.
regards to trading and making money on that day-to-day basis in regards to like the volatility.
What time frame do you trade off of?
So I look at every single time frame, but I do not do 1 minute, 5 minutes, or anything like that. So I do a top-down analysis. So we start with the monthly, then we go to the weekly, then we go to the daily. But the trading time frames, we break down the 4 hour into the 30-minute, and then we break down the 1 hour into the 15-minute, because that gives us our overall move we have a weekly move, and then we have like, okay, what's going to happen? And then we always trade what we see, not what we think. So we can have an overall basis of what's going to happen. But until we have our confirmations and our confluences line up, we don't actually execute the position.
Sounds very familiar, right? Stop highest view, monthly, then work your way down, pick one time frame, master that. How many trades per month?
I take about 2 to 3 trades a week.
Weeks? No, okay.
So I take 2 to 3 trades a week,
Okay.
but the foreign exchange market is so much liquidity that pumps through there.
But even with all the liquidity, she's taking 12 trades max.
A month.
Yeah. And then that's how like you don't really lose, because you don't take, like, it's so much money that comes into the market, but you only take the positions that you're sure about. Even though the market's open and everybody wants money, there's so much money that can be made on a day-to-day basis, but that don't mean that you have to actually execute every position. We're not a crackhead for money. The whole goal in trading is to protect your equity. It's like when I was boxing, the whole goal, keep your hands up.
Yeah.
Right?
Check yourself at all
And
times.
Yes. Hit without getting hit. The whole goal in trading is to extract money without your money getting
All
got.
defense.
Yeah. So, I mean, it's interesting with all the sanctions, and Shai is correct. Like, as we're driving around and seeing, you know, a lot of people are protesting against what's happening in Ukraine. We got an interesting question, and Mike and myself were having this. Somebody was asking, is this a good time to be shorting Russian stocks, or are we trading the ruble, or are we shorting it? Because obviously, when you see an entire stock market drop 45% in a day, which is like, wow, I mean, we can't even fathom that. But like, is this a good time if we're trying to make trades?
The Russian stock market is closed right now.
Oh, for like,
Look it up. They closed
wow.
it.
Yeah.
They halted
frozen.
trading, right?
Yeah, the all-time low was $10.34 for RSX. It's at 1078. They halted.
Can you explain to them what RS?
RSX is like their equivalent of their index. So how you have VOO for the S&P 500, RSX is their index equivalent.
So
That's the first thing I looked at.
Yeah,
So it hit its all-time low.
yeah, because it probably
close to
would
it.
have went to $1 if they would have frozen.
And I think
halted trading.
Yeah, the reason why is because sanctions have been put in place. Heavy sanctions have been put in place on the Russian economy, on Russian oligarchs, which is the ruling class. Like even out here, what team is it? Chelsea.
Yeah.
The owner of Chelsea is a Russian oligarch.
Oligarch.
Yeah.
And they're talking about taking the team, right?
Yeah. So I actually took the notes on that. So Rabanovich is his last name. If you're a Chelsea fan, I'm sure you know, or if you're a fan of Premier League. And so what he is decided to do is he tried to put the team into a trust. He was going to hand over the rights to it into a trust because of the sanctions. Now, they said that Ukraine has reached out to him in support, and people don't really know how the conversation is going, but you know, if they're freezing your assets and you're in a country like the UK and you're getting your money is tied in Russia, you can obviously see how this could become a problem, and we'll see how that's going to pan out.
This that Red Panda Anthem. Ian, what's up? This that Red Panda Anthem. Red Panda, what's good? Red Panda Anthem. Your boy.